This notoriously cyclical industry has been on fire lately, as ever-increasing demand fuels returns for investors in this industry. Semiconductors are the proverbial brain of AI, with their transistors acting as neurons switching on and off to process signals, and synapses strengthen or weaken connections based on learning, or AI training. These neural networks, stored and adjusted in semiconductor memory and logic, encode the learned patterns. Because of this, the entire chip supply chain, from chip designers to equipment providers to the foundries themselves, have seen incredible returns year to date. Welcome to the Quality Investor. In the last couple of months especially, the chip industry has seen a surge in the market far outpacing the S&P 500. Since August 1st, the VanEck Semiconductor ETF, SMH, has risen 23.7%, while the S&P has returned 8.9% over that same period. This performance is the result of a confluence of factors. Hyperscalers such as Google, Amazon, and Microsoft are major contributors to this demand due to their huge capex spending for data centers. NVIDIA, AMD, and TSMC are direct beneficiaries here. This capex spend comes on the back of more favorable macro environment as well. Fed rate cuts began in September. This bolsters investor appetite for risk since lower rates tend to lower borrowing costs, which boosts economic activity such as building extremely expensive advanced fabs to make the chips. And emerging growth areas like electric vehicles and robotics provide added tailwinds to an accelerating industry. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. So today, we are looking at one of the best performers this year for semiconductors. This business is on the equipment provider side of the supply chain, and it is, of course, Lam Research. Lam Research has been outstanding in 2025, returning 110% year to date, far outpacing the S&P 500 and many in their industry. Trading at about $141 before their earnings, they climbed in 2 days since the earnings to $151.68. So the market continues to like what they are seeing from Lam. It helps that they beat on the top and bottom line. Their growth has been explosive. On a trailing 12 basis, their revenue has grown 26%, earnings have grown 47%, and operating margin has expanded 99 basis points. We'll unpack these earnings and see what this says about Lam's future prospects, but this will also serve as an entry into the exploration of the chip industry as a whole. Lam Research's role in the semiconductor ecosystem is as an equipment manufacturer. It is an essential business for providing the tools required to manufacture advanced chips for AI. As the market leader in etching tools, etching is the process of creating intricate patterns on chips, Lam has surged recently in the market. The primary reason is that AI chips require complex memory and logic chips. I won't get into the technical details since I'm certainly no expert, but Lam excels in this area. So with the surge in the sales of these types of chips, Lam is of course the upstream beneficiary with robust order growth from foundries such as TSMC. But Lam also has high exposure to China, roughly 43% compared to Applied Materials, just over 30%. The ongoing trade war with China has caused extreme volatility in the markets and especially with semiconductor stocks. Despite all of this, Lam Research has seen positive market sentiment. I mentioned the strong fiscal year 2026 Q1 earnings, but as we know, markets are forward-looking. Lam also offered strong guidance, which signaled continued strong demand for AI chips. The stock rose 4.5% the day after earnings and has seen incredible 57.4% growth since August 1st, outperforming not just the S&P, but the VanEck Semiconductor ETF also. These earnings reinforced Lam's importance in the AI chip equipment market, which looks to be in the beginning of a multi-year upgrade cycle, given the hyperscaler capex spending. But remember, chips are a very cyclical industry, So once this investment cycle ends, we will see sharp downswings in revenue and earnings growth, and thus stock price as well. But Lam Research is essential to the industry and a fundamentally sound business, which will also provide insulation from that. Either way, Lam is a strong player in the chip industry, and as AI continues to take off, so will Lam's core business of chip equipment manufacturing. But does all of this mean that Lam is a reasonably priced stock in the market today? Let's find out. Lam's income statement for the quarter looks very good for this business. We see they have $5.3 billion in revenue for the quarter, up from $4.2 billion in the same quarter a year ago. That's a 27.7% year-over-year increase. Operating income is also up $1.8 billion versus $1.2 billion a year ago, a 45% increase year-over-year. But more importantly, we see that gross margin is at 50.4% versus 48% a year ago, and then operating margin at 34.4% versus 30.3% 1 year ago. So we have gross margin up over 200 basis points and operating margin up over 400 basis points year over year. So these are great numbers. Expanding margins are key to creating value long term. But the biggest reason for this margin expansion is part of Lam Research's wide economic moat, and that's their pricing power for their etching tools. Their etching tools are highly specialized, and Lam Research is the leader in this area of the supply chain. So they can afford to charge a premium for their high aspect ratio etch tools, and the average sticker price of these tools has risen by 15 to 20% over the last 2 years. Not only that, with the boom in AI demand, that means a lot more of the types of chips being sold are memory heavy, and the memory etch tools have a higher margin than, say, the logic tools. So that product mix is shifting towards the higher margin products for Lam Research, and that's pushing that margin even higher. But aside from their pricing power and the favorable product mix, notice that their operating expenses came in at $855.8 million versus $738 million 1 year ago. That's only a 15.8% increase. So their revenue, which increased at 27%, is far outpacing their expense growth. So they're doing a good job of managing their expenses as well, not allowing those to grow with their growth in revenue. And that's also creating value through margin expansion. So Lam Research is doing a great job for investors. And with the AI demand only increasing, it's going to get better for Lam Research because of that product mix shifting to the higher margin tools. And earnings per share at $1.24 versus 86 cents a quarter a year ago, also a nice increase. Looking at that segment revenue, we see that reflection of their pricing power. Systems revenue, $3.5 billion for the quarter, up from $2.4 billion. That's where they earned the bulk of their revenue increase in this quarter. It's a 48% year-over-year increase. Customer support related revenue, the servicing revenue, pretty much flat year-over-year. So it's these AI tools in demand that are pushing the growth forward for Lam Research. And that should continue at least for the next 3 to 5 years with this massive investment cycle we're seeing within the semiconductor supply chain. And the outlook for next quarter, that $5.2 billion plus or minus $300 million for revenue. Gross margin actually forecasted to come down slightly from this quarter to 48.4%. Same with operating margin as well, down to 32.9%. Both of these are plus or minus 1%. And earnings per share at $1.15. But this guidance is also slightly ahead of what the market was expecting, and one reason why we saw that nice pop in the share price post earnings. Another very attractive aspect of Lam Research's business is how capital light they are. They generated $1.8 billion in operating cash for the quarter, yet only have $185 million in capital expenditure. So Lam Research brought in $1.59 billion in free cash flow just for this quarter, a 9% increase year over year. But because they're so capital light, it allows them to have such a high return on their invested capital, and then they can deliver that free cash flow back to investors, both in the form of dividends and share buybacks. So this is a very investor-friendly business. Their ROIC is topping out now at over 40%. So again, more value creation for investors. And one of the reasons they're so capital light is they actually outsource the assembly of their tools to other manufacturers. So they don't have to invest in those large final assembly plants. And that's where the real bulk of PP&E lies, is in these massive plants to build final products. Think TSMC, whose CapEx is roughly 35% of their revenue, versus Lam Research, whose CapEx is in the 2 to 3% of revenue range. So very capital light. They also do just-in-time delivery, meaning they build orders on demand. So they don't have massive warehousing costs either. So that keeps costs low. And again, it allows Lam Research to return that free cash flow to investors. Lam Research is not a super high growth business, but they should experience a lot of growth, at least in the very near term, because of the AI demand. In the last 5 years, their revenue has grown at 12.9% per year. And I'm forecasting on a bear case revenue growth of 7.5% over the next 10 years, 9% on the base case, and 10.5% on the bull case. But for my year one, I'm projecting about 12.7% year over year revenue growth, and that's based on their own estimates. And for operating margin, I'm expecting that to remain flat for the bear case through year 10 at 33%, rise to 35% for the base case and 37% for the bull case. And these might be conservative numbers, actually, based on the numbers that we're seeing now with the current product mix, but factoring in the AI demand and Lam Research pricing power, as well as that favorable product mix shift to the higher margin products, it's very possible that operating margin will be much higher than 37% by year 10. Free cash flow margin on a trailing 12 basis sits at 28.3%. I have that growing to 27% for the bear case, up to 35% for the bull case. So some solid growth, I think conservative estimates here for Lam Research over the next 10 years. But does this mean that Lam Research is currently priced where it's reasonable for a quality investor to purchase some shares? Lam Research came into the weekend at $151.68. And relative to their history, they have a pretty high PE ratio right now at 33.4, which is well above their 5 and 10-year average. Same with the forward PE, sitting at 33.7. Given today's share price, the market right now is expecting free cash flow growth based on a reverse DCF over the next 10 years of 9.6%. And in fact, my base case free cash flow growth is right in line with what the market is expecting. On a bear case, I have their DCF at $117.86. Base is at $149.30, and the bull case is at $188.79 on the DCF. So just on the base case alone, it looks like on a DCF basis, they're pretty much priced right where they should be in the market at $151. LRCX pays an outstanding dividend and a very healthy growth dividend as well. Their dividend grew 15% year over year. It's at $1.04 now. And on a bear case, I'm expecting their dividend discount to be at $115.53, $140.90 for the base, and $175.27 for the bull case. I'm expecting dividend growth of 12% on the bear, up to 16% on the bull. Their free cash flow payout ratio is currently less than 25%, so there's a lot of upside for the dividend. And they not only pay a growing dividend, but they also do aggressive share buybacks. So investors are really getting rewarded in two different ways. Their exit multiple sits at $162.35, and this is based on comps of ASML, Applied Materials, and KLAC. So without any margin of safety, you have a buy price of $152.03, right in line with their current share price. But we like a 20% margin of safety for Lam Research. At the end of the day, semiconductors are still a very cyclical business. So you're going to have some serious downturns pretty frequently for the semiconductor market and stocks in general. So it's very reasonable that this could drop in price quickly. So $121.63 buy price at a 27.1 forward PE, I think is a reasonable entry point for this stock. So anything below $125, I think is a reasonable point to start buying Lam Research. After the initial tariff craziness in early April, this stock even fell below $60 a share. If you bought it back in that point, congratulations on your massive upside since then. Unfortunately, I missed it, but there is still a very long runway of growth for this stock, but it has raced up quite a bit in the market. $150 is a little bit rich. So to add this to the portfolio, I definitely would want to see it come down a little bit. And in my mind, it's certainly one of the best 4 semiconductor equipment businesses to own. The other 3 being ASML, KLAC, and of course Applied Materials. But you can never go wrong with Lam Research as well. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.